The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to start our show today with our usual review of the DAX, which is the equivalent of the S&P 500 across the pond over there. This is a very liquid and highly volatile trading vehicle, folks. It's a lot more volatile than we get in the S&P 500. As you can see, yesterday we had closed right near the 61% retracement of the previous day's range from August 29th. And what I'd like to do now is just move forward to see what happened yesterday and then what happened today. As you'll notice today on the 30th of August, we actually gapped above that 78% level, and we went right up to the 1.27 level that we've held there for the past 4 hours. It has not gone above 10,670 as of yet. And as you can see, that's been a really important resistance area from August the 22nd. We took out the August 22nd high by about 10 points on at least so far. That doesn't mean it can't go, crazy to the upside, but this thing does follow along nicely with the pattern. So if you trade the S&P, you ought to keep an eye on the DAX because it gives you a pretty good indication of the strength in the European section coming from, of course, Germany and London. And believe me, they don't go sideways or opposite very often. They have a very, very high correlation. I don't know if that's related to what the central banks do or not, but who knows. I'm going to do something different today. I'm going to do we're going to do a microscopic view of some of these markets that we look at. Here's one that I wanted to start out with today, just to give you an idea of what I look at when I'm watching. I hope you enjoy this because I enjoyed putting it together. But anyway, this is the picture of the euro back on April 26th. You'll notice we had that huge spike, which was well over $1,500 to the upside. And then you can see that the market broke and it went down to the 1.618 expansion level. And then it's tried to make a three drive to a bottom pattern here last night, early this morning here on August the 30th. What I want to do is to walk you through what I'm looking at when I'm doing this, because sometimes you can get these contracts to get you to a point where you're very, very close to, being right spot on, and you don't have to risk very much at all. And I'm talking about a contract that's worth $100,000 that you don't have to risk more than, 25 pips, which is 250. That's a really good risk-reward ratio. So what I've done now is I put the waves in the way that I see them. Now, I do not do Elliott wave counting. And the reason I don't do that is because I frankly have a hard time discerning some of these counts that they have, whereas if I look at just simple ratios and patterns, it's much easier. My mentor, John Hill, got me started doing that back in 1970, and it works for me. I just don't do Elliott wave counting. I've been around some Elliott wave folks before, but frankly, they've not been able to prove to me that it's any better than the simple way that I tried to do it. But start here on the left-hand side, and you'll see the AB swing, and that was the market when we went up after the Federal Reserve, made their move. That move was well over $1,500, and then you see the market. We had a big reversal, and the reversal came down to 1.618 of the A to B leg, and that's that C point that you see there. That's the 1.618 expansion. And what I was looking for there was a 382 rally off of that point. As you can see, during August the 28th, which was Sunday night, we had a 40 pip rally. We came down and made a new low. Then we had another 40 pip rally, and then we came down and made another new low with very similar type of cycles that are in there. So I'm thinking that because we did make a slightly lower low than we did on the middle cycle, which was down around 1160, that we had a chance here for a pretty good 40-point rally. So if you buy it around 1160, a 40-point rally is over $400. So you have a really good risk-reward ratio. But you'll notice here that there was no rally here for well over 2.5 hours. And so the best way to do this, because the market's not responding, is just to get out of it and wait and see. And that happened to be the right thing to do because we've already gone down below the 111.50 level. So that tells us that that's what we're doing. I'm showing you this just so you can microscopically look at some of these patterns. This is a 15-minute chart, and you'll be able to see some of these really closely so that you're able to do your calculations, relatively easily. Now, the other one that I wanted to show you with the same type of thing is the gold, because this was a trade that our good friend Mr. Z in the den did yesterday. And I know he looks at some types of the same types of numbers that we look at here. But here the gold was different. You'll notice from A to B, the market dropped $1,500, and then it rallied $2,200 up to point C. And then after point C, the market came all the way down and stopped at a 1.27 bottom, exactly to the tick. That was at the yesterday's low, right on the opening. We hit around 1317. That was a 1.27 of that BC swing. And look what happened. We rallied up, and we went up to a 382 rally of the whole thing. And as you can see, last night the market backed off and went down to a 61% retracement. Now, some of these are pretty good swings. It's $1,100 from the low to the high. But, it is they are tradable. Gold is very liquid, so you're able to, watch that very, very closely. So what this sets up for me now is you'll notice here that if we go below that 1317 and we had a 382 rally at 1329, that means we got $22 to go below the 1329 to get to our next target, which is going to take us in to 1302. So if we have any weakness below 1317, that's most probably, where it's going. Remember, our targets on the silver are just below $18 an ounce, and we're not very far away from there right now in the silver. So keep this in mind as you're doing it. But this is some of the things that I try to do, to pick an entry point that is, relatively easy to spot. Whether sometimes they're not as easy as you might think, but other times they are, and that's the real key. But those are the ones that I was looking at today, just to get a pretty good idea. I do the same thing with the E-mini. I do the same thing with the DAX and the bonds and all the others. I look down at it from an hourly chart. I start with a 4-hour chart, then I go down to the other one, and then we'll look up to see what happens. From that level, we go from 4-hour down to 1 hour, down to 15 minutes, and then I'll move down to a 5-minute chart if the market is really, really active. That's the key to look at. Now, we've got another market in our crosshairs today that I think will be pretty interesting, and that happens to be the cattle market. As you remember, yesterday we were talking about cattle. Oh, we got to take a break already? Wow, what happened? Shut the front door.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at October cattle. We are really at major ABCDs going back into last year here at this 105 level. If you remember, we had Rich Anderson on from Anderson Capital Management last week, and he said there would most probably be a retest of this 105 level, and we certainly did. We closed right near our lows than we did on Monday. If you'll notice that we had this big move down on Friday, which was a wide-ranging move of over 3 cents. Now, if the market doesn't follow through and we get back above 106.5, that tells you that that's a reversal type pattern, much like we had back on July the 20th before cattle rallied about 12 cents. So this is this is not a buy recommendation. This is a way of technically looking at the market to try to get a very, very low risk entry. That's the main thing. You know, that's what we try to do, is to control the risk the best we can. We try to match the pattern the best we can, and this is one of those particular patterns. W.D. Gann, one of his famous rules that he had, that markets, go up and they go down in the same way. And as you'll notice, that the number of bars up and the number of bars down in this past move that make this double bottom were very, very similar. And you'll notice the top stopped exactly at the 78% level from May. It was at the 50% level from March, and it was at the 38% retracement level of December. So there was a lot of reasons, why cattle were getting ready to come down, and we sort of pointed that out. We don't trade cattle a lot because there's just too much other stuff that is more fun to trade and easier to trade, because the currencies trade 24 hours a day, 5.5 days a week, and cattle are, they trade maybe 5 hours a day, and they do a little bit of overnight, but very, very Okay, Duffy, I give up. We have too many comedians here in the Tiger Den. I'm talking about cattle, so he's saying, "Holy cow!" Sounds like Harry Carey, Duffy. And you're probably too young to know who Harry Carey actually is. Okay, we have a request to take a look at some stocks. Okay, now this is one that Basil always talks about, not always, but a lot of the time. And this used to be the bellwether of the stock market, which is General Electric. This was back in the days when Jack Walsh ran the operation. But you'll notice here this sideways movement in General Electric from all of August. Can you believe this? It's been in less than $1 range in General Electric, and you'll notice that the volume has just totally dissipated. Folks, this is not good for the market. When the bellwether stock, you can't get any interest in it, something's wrong. I don't know what it is, but there's something wrong. But this volume is just very, very very, very scary, and the fact that it's coming at a time when the stock has not made a $1 move in a month, and almost a month anyway. So it's very, very interesting to see this at the time when we're looking at these the VIX index, which I think is the trade of the year. I don't have a trade of the year, but if I did, that's the one I would be looking at. Okay, now we've had a question about Facebook. I wanted to bring it up and let everybody see what I see on Facebook. This is a weekly chart of Facebook. Remember, this company doesn't make anything other than hopes and dreams, and I guess that's what people like to have. But you'll notice that it's made a big ABCD pattern from August through January of 2016. Hit that exactly perfectly up at 129. We're trading it around the I think it's around 123 and change today. We've had several patterns up at this level. Whether it hasn't broken very much, as you can see, we've been sideways for 5.5 weeks, just like the rest of the market. But this has met some big objectives. If you'll remember, Facebook came out a couple of years, I think it's 4 years ago, 5 years ago, and it literally it dropped by over 50%. Of its value. It got down to 20 something, I believe, and then that's when everything changed and it started to go higher. So even though it was an unsuccessful IPO, it turned out to be a very successful, stock offering. As you can see, it's gone up 6 times in a matter of just a few years, which nowadays I guess that's standard, but we'll have to wait and see. That's the key thing to look at. But I think the interesting one was that General Electric was the fact that you don't have any volume in that. Now, the next one is one of everyone's favorite, which is Starbucks. It doesn't make any difference whether coffee prices go up or down. They raise their prices. Starbucks has been in a bear market for a year, folks. We made a top way back there in November. You can see the big ABCD pattern that we had from November into that February low. And then we had the rally up to exactly 78% retracement to the tick back on when it hit 61.69. That was at the in early April. Then we came down. We made a sort of a complex bottom. Then we rallied up to a 61% retracement, and then again to a 78% retracement. This stock has had nothing but lower highs, folks. This is not a stock that you want to buy, in my opinion, because it is in a downtrend. We have lower highs and lower bottoms, and that is a definition of a downtrend. So I would not be interested in going long Starbucks. However, if you ever do get up to Seattle, make sure you go to the original Starbucks, which is out there on the Pikes Peak Wharf, where they have all the fish markets and stuff, and you'll be able to see everybody standing in line wanting to buy the original Starbucks coffee. Anyway, that's what we see in the coffee. So if you'll give me 1 second here, I need to. I'm getting an alert on in the Canadian dollar. I believe I've got an order sitting there. Give me 1 second here, and I've got to do something here, and then we will see it. I liked Harry Carey, Mike. I met him several times when he was a announcer for the St. Louis Cardinals, and I met him when he was in Chicago and ate at his restaurants a few times when I was trading there on the floor of the exchange. He was really a nice guy. That's from meeting him very, very casually, of course, but that's who knows? But I liked his sidekick, Jack Buck. He was very, very good. And I'm a big baseball fan. I used to be a baseball fan, not now with the crybabies and the multi-million-dollar contracts. I was a baseball fan when $100,000 got you to see Willie Mays play and Mickey Mantle and Ted Williams and people like that. My God, I'd hate to think what those guys would be making today if they were, back playing a ball again. Give me 1 second, folks. I have to do something on the Canadian dollar, and I'll share it with you. But if you'll give me a second, my alert just went off, and I wanted to make sure that it is doing what I think it's doing, possibly, and then what's up? It is. So give me a second, and we are at the proverbial moment of truth. So give me a second here, and you'll be seeing it. Hello, Federal. Okay, now we'll put it down here, and all I have to do now is find it. So we will give myself a little bit of a break here. Sorry to stall, folks, but this is important. All righty, and well, you guys are important too. I understand that, but give me a second here, and I will get this Canadian dollar chart up here. Hopefully, Hail Mary, full of grace, keep the Italian in first place. Hold on, there we go. Here we are. I'll be right back, and we'll discuss this Canadian dollar.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted two charts here of the Canadian dollar versus the U.S. dollar up at this 130.60 area. Now 130.63 is the exact price. And what we're looking for here is a potential Gartley sell signal. The risk on this trade would be about 40 pips, but it's taken several days to form it, which is very, very good. This is a 4-hour chart that you're looking at recently, so keep an eye on this. This is a very interesting pattern that is unfolding here in the Canadian versus the U.S. dollar. Remember, that has a very high correlation, with the price of oil. Lately, it hasn't over the last few days, but usually it does. So we'll just watch that very, very carefully. Now, I've had a question about one of the greatest companies in the world, and that is Amazon. I just wanted to walk through and just show you what I'm looking at in Amazon. If you'll notice here, when we watch Amazon over the past year, you'll see these two red boxes that are marked there, and those are topping patterns that I wanted to go through one at a time to let you see because they are very significant. And I wanted to show you the first one here was November, December. Then we had another one that we're forming right now as we speak. And all I'm going to do now is to blow these up so that you're able to see them a little bit closer. And as you can see here, this is the one that we had several months ago. And we'll see what's going on. The IBM, we happen to be short that from the 162 level. I believe somewhere around the 149 level would be interesting to take a look at it to cover shorts, but they're still way too early yet. They might even turn around and turn into a break-even trade. You don't even know. But anyway, let's take a look at Amazon. As you can see, in the November to January period, we had that huge break. It broke from 696 all the way down to 500 and change level. And so that's the one pattern that was there. And if we look at the one that's forming now, we're seeing pretty much the exact same thing. The question is, are we going to make one more little jab to the upside to finish the 1.27 expansion, which would take it about $8 or $10 higher? We have taken out the highs. If you'll notice, each of those three highs that occurred since August 1st were just marginal. They were about 1 or 2% above the old highs, as you can see, the 1.12 and then the 1.06. So this tells you that this is really getting ready from a technical standpoint to turn down. And that's what it is, folks. It's a probability. It is not a certainty by any stretch of the imagination. Okay, now I had one other question from one of our listeners, and that was about the trade that we were looking at last week when natural gas was making this big run towards the 135 pattern. As you can see here, once we closed above that line, which was a beautiful Fibonacci line, in other words, from 1 to 3 was exactly 786. From 3 to 5 was exactly 786. Once we closed above that line, and we mentioned this on the air, that we're most probably, heading higher, and that's exactly what's happened. The market's moved another 8 or 9 cents per cubic feet to the upside. That tells us that we're getting closer to that 130.03 level, which is long-term, 1.618 expansion resistance if we get to there. But we have that on our watch list to see if it does get to that level. But it'll be a little while getting there would be my guess. Now, I did want to talk one more about another of my favorite stocks that I use every day, and that is Google. One of the great companies. Boy, these folks have really done a lot to help humanity. Now, they've helped themselves too, but they deserve every penny that they get. I mean, they have basically made it easy to research anything. So the main thing to look at here, if you'll look at the middle of the chart where you see the 1.0 ratios, those are equal moves. Those are double tops or double bottoms. Each one of those took out the previous highs or previous lows by less than $1 on a $790 stock or a $660 stock by $1. I mean, give me a break, folks. I mean, that's another reason why you can't put your stop at the old lows. Just put it a few dollars below it, for heaven's sakes. Then you'll notice we made the 1.618 expansion from June through August. That's another reason to think that we're at a pretty good top here in Google. So that's still neither here nor there. We're still looking at patterns. That's all we're looking at. I did things a little bit differently today because I tried to give you an idea that, I just can't look at all the stocks that you folks ask me about, but I try to pick the ones that I think are relatively interesting, and the ones that are in the news, of course, and those are the ones that I like to focus on. So we'll take a quick review of the market here. We're going to have I believe, some really strong resistance in that 1285 level in the S&P 500. And the reason for that being, folks, if we take a look what really happened in the market yesterday and also through Friday, if we take a look at the New York Stock Exchange Index, you'll notice on Friday we came down and we made three major ratios. We made a 618 retracement of the August 2nd low, a 1.27 expansion of the August 17th low, and a 1.618 expansion of the August 22nd low. And all we're doing now is we just rallied back to a 61% retracement, and we could easily get up to a 78% retracement. The key is if we get into new high ground, then and that would not be unusual because we're coming into this Mercury's in retrograde motion now, so they want you to do everything wrong that you can possibly do. But also we have the solar eclipse and that new moon, and that ought to be pretty exciting to take a look at that, because those have been around these favor wild days that we get in the market that start with a C, but we'll see if that happens. Anyway, it's a $64 question of whether we get it. Anything above 186 would tell me that we're most probably going to attempt a new high in the stock indices, but I really don't think it's going to go anywhere. And the reason for that, the volume is just so terrible that there's just nobody, in the market that wants to that really wants to do anything. So that's the key thing to look at. I've had several questions, had a lot of questions this morning, which is good because that gives me a chance to do things that I don't have to do myself. In other words, to try to prepare something that you have an interest in. And I wanted to talk about the oil market. And where did I put the oil market? Oh, dear. Did I do it again? Yep, I did. I'm going to have to do it at the break. Shucks. Well, I'm not going to worry about it anymore. Okay. Here's a review of the platinum, because it's coming down also. I think we're heading down below 1,300 in the gold, folks. That's the way it looks to me. It has no rally power at all, and silver keeps weakening. I mean, the market's in a downtrend, for heaven's sake. So, this might have made a major high up there, because those are big numbers that we hit on all those things in the gold and silver and platinum are all weekly fib numbers. So those have to be respected. But, longer term, I think we got a chance for something really good to happen if we make a nice bottom down in here at around 1275 in the gold and around, 1,000 in the platinum. That's hard for me to even say that, because I can't believe that platinum is selling at a big discount to gold. It's just been recently that has happened, and that has to be related to jewelry sales. And I know that those are, way back or, off a bit. So we'll take a break here, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a look here at the crude oil market. As you can see, we've had some nice Fibonacci numbers hit through this sequence of lows and highs. And you'll notice the little red boxes that I have there. Those are similar time periods with equal corrections, and that's exactly what's happening here in crude. And believe me, this is not bearish in my opinion, because you have these little 5-day corrections where the market barely makes a 38% retracement of the previous low. So that could be potentially bullish. Any move above $49 a barrel would really get this thing moving, because if it breaks $49 a barrel, it's most probably going to go to $49.01. At least that's what my crystal ball says. If we take a look here at gasoline, which is one of the byproducts of the cracking process, you'll notice that we've had a little bit of a pullback here. But this is our first pullback since we made our low back on August the 12th. So this is just normal, a 382 pullback. Keeps it in here pretty close to $1.43 a gallon, and we're trading at $1.45 a gallon right now. So here again, it's a chart that looks like it has some bullish potential. If we get gasoline above 154, you'll be looking at $3 gasoline, in my opinion, because that would be a monster ABCD pattern forming that would give it a really good target up in that area. But it has to clear that area. Even though they've been quiet for a while, that doesn't mean they're going to do very much. A lot of this is probably going to be related to what's happening with the currencies, especially with the Canadian dollar, and we'll see how that much unfolds. But right now, there's really not a lot going on. The same thing is true in the heating oil. The heating oil has been the biggest or the best of the as far as being the stronger of the group, because we exceeded the 78% retracement in the heating oil, and that makes it a what we call a, if you want to buy something, you'd wait for heating oil to back off. And if you'll, oh dear, hold on a second, I've got to get that chart up here so we can take a look at it. It's important that I show you this heating oil chart, because here we come. It'll only take a second, because it is not backing off at all. I mean, as you can see here, we had this run at the 61% retracement off the March lows. We went up to the 78% retracement. Folks, we've been here 10 days in a very, very, very tight range. We're up a little bit today. This looks like a market that really wants to break out to the upside. Anything above 154, 5 cents away from where it is now, would certainly trigger more buying coming into this. And as you can see, when these things move, they move in 40-cent increments, and 40 cents in in oil, heating oil, is a great deal of money. Well, about 20 large. So keep an eye on this currencies on the currency on the crude oil complex. Both all three: crude oil, gasoline, and heating oil. Watch all three because they have a potential of breaking out. And again, this key word here is potential, because we're seeing pretty big deflationary what do you call it, tendencies in everything. Wheat, corn, and even beans. All of these things are, making recovery lows, if not new lows, and especially wheat and corn. They have more wheat and corn than they know what to do with. We've seen this before, but that can change, in a heartbeat. But right now, there's not any pattern that I can see that would get us long either wheat or corn. Beans, they're trying to hold, but frankly, I don't think they're going to hold that level that they've looked at for some time. The key from the livestock is to watch the 105 level in the cattle, because if they close below there twice, that tells you there's more selling coming. And if they don't, then we'll be able to see something, and we'll take a look at that. We've had a request to take a look at the soybean oil chart. And that was one of my favorites. Boy, that was a life changer for me. Every time I see soybean oil. I used to have customized license plates on my car when I was in California, and it said soy oil, S-O-Y-O-I-L. And when I stopped to get gas, these folks would ask me if I was talking about Saudi Arabia oil. But that's not the case. So we'll see what's looking at. Yes, it has been very, very bullish. Wow, it really has. My goodness, that looks totally different than the soybean chart. Well, it is different because it is the cooking oil part. Oh, this is a very interesting chart here. Give me a second, and we'll put this into the room. I found a way to do this without breaking an arm and a leg mentally. So hold on a second, and we'll put this in to the room so you can take a look at it. This is really a very bullish chart. In soybean oil. So hold on one second, and there it is. Okay, we'll take a look at it here. Yeah, if I had to buy any of the grains, that would be the one that I would be looking at, because it certainly has held up, really well. I'm sure it's related to the problem that they've had across India with their monsoons not coming on schedule like they've had. But this market made a really nice bottom back in July, beautiful ABCD pattern, and we rallied up. We went above the 78% retracement, and all we've been able to do with the collapse in beans, wheat, and corn is make a 38% retracement here in the oil. So this has got a potential. I'm not a buyer here yet because I don't have a really clear pattern. At this point, this is just a little pullback pattern at 382. But it was something to keep an eye on. So thanks for bringing that to my attention, because I hadn't followed I've been following meal and beans because that's over 80% of the product. But the oil is holding up relatively well. Folks, that oil market is a real speculative market. Years ago, there was a guy named Tony DeAngelis back in the 50s, had a great idea to put oil on the top of these giant containers. And they were 99% water, but the oil was on the top. So when they went to test the oil to see, what the quality was, all they had to do was just skim across the top, and he paid off the guys that were testing the oil, and they were going to the banks borrowing against this oil, and there was nothing in them but water. But that scam lasted for about 10 years, and then 25 years later, another dude did it. And so you never know. What goes around comes around, and nothing is any different anywhere. So they went to see what's happening. Yeah, then he went to work for Goldman Sachs. No, I think he went to work for, what's the other one? J.P. Morgan. That's my guess. Who knows? Anyway, we'll look at that one later. We've got another break coming here pretty soon. Then we'll cover the rest of the thing to look at. But we've got a market that's relatively quiet so far today. It's done absolutely nothing. Looks like we're unchanged just about everywhere. The euro is getting ready to make some new lows down here at the 111.40 level. Keep an eye on that. That's a little tiny expansion number that may or may not hold. It's so quiet nowadays. They're probably waiting for this job report that's going to knock the socks off everybody on Friday like they usually do. But that's neither here nor there. So we'll keep an eye on that one. And let me see we have one other question about another stock. and that is Apple, Dipple and Do, hold on. They get stuck with $14 billion tax bill. They can pay it out of petty cash. Not a problem. Hold on one second here. Well, the market's it's actually come back pretty good. It's rallied a whole dollar from its level that it made just recently. So I still think Apple has got 85 written all over it. That's what it looks like to me. Okay, let's take a little break here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've asked to take a look at the Russell 2000, which is also the IWM. You'll notice that it's also completing that 1, 2, 3, 4, 5 expanding triangle. But again, boy, there is absolutely no volume over in that sector at all. You thought General Motors was bad. This one's even worse. So I don't see a whole lot of interest here other than whether this is short covering or minor buying. I don't know, but that's what the pattern looks like. The key pattern to look at, boys and girls, one of them, of course, is the S&P Weekly. As you can see here, this is over the past several years. We've completed the 1, 2, 3, 4, 5 expanding triangle pattern here back on August the 15th. We've gone nowhere for 2 weeks. How much longer this is going to hold up, I don't know, but this is historical. Pay close attention to it because I really think that we've got a chance here to have some type of a really, really major outlier event that'll probably happen very, very quickly. And then we'll go into some really wild volatility, because this low volatility is not going to stay with us forever, folks. Wall Street cannot allow that. They need volatility to get people, making decisions. And that's one of the things that you want to remember, that's what's going to be happening. So just remember that that's what we're looking at. We're also going to be looking at a buy here in corn and wheat sometime around the solar eclipse, which will be on Friday. And we'll take a look at that very, very closely. That's a very, very interesting one. To be on Thursday, the 1st. So we got 2 more days. Tomorrow's the anniversary of Princess Di passing away, so we ought to have a little moment of silence for her tomorrow. A really nice lady that tried to do a lot of good things that was taken from us too quickly, and another who knows why, but that's the way life is. And that's the way it goes, as my little grandson would say. Okay, keep in mind, 21.85 in the S&P. Above that, she could pop and make new highs, whether that's going to happen or not. Also, watch the gold at 317. Below that, we're looking at least 1302, and most probably somewhere around the 1275 level is what it would look like to me. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.